Well, Miss Ella, fun little post about the woes of payroll taxes. I think when we all get a job, we begin to see what all the fuss is about. Why do people complain so much about paying their fair share? Because when you get started, it kind of feels like you're paying more than your fair share. My name is Paul Vasquez, and I help people become ethical millionaires. So, taxes have been around a very long time. Since the dawn of history. In fact, writing started off as an accounting thing. So, some of our first writing that we see in recorded history beyond pictographs was accountants counting stock, counting inventory, talking about sales, and I'm sure at some point real soon came in the taxes. They were taxing at some point before people had steady jobs, steady incomes. They would sometimes tax people on livestock. If you go back to like the rule of kings and queens, they would collect a part of your harvest, a part of everything else that was produced on their land, right? So they would tax people because that was a way of paying rents at first, right? And so if you kind of bring that over and you say, well, instead of there being a ruler or a monarch who we pay our rent to for living on their land, in a way, that's kind of what taxes are when it comes to our democracy, our democratic republic, is that instead of there being a single person or a family that's in charge of everything, it is a body of citizens who come together to create this governing group, and they say, hey, we need to defend ourselves as a country. We need to have roads and all these other things. So you have these groups of people that levy taxes on you. Some of the biggest taxes you see, especially when you first start off, are your Social Security and Medicare taxes, because you don't get those back on a tax return. So those taxes are primarily an income redistribution, right? Taking from those who are earning money right now and giving it to the seniors, the disabled, and paying for their medical expenses during that phase or stage of their life. And then you've got the income tax, where there's a good chance if you file your taxes at the end of the year that you'll get most of that income tax back at lower tax brackets because we have what we call a standard deduction. And that standard deduction, you can think of the minimum amount I need to live off of. That's kind of what the standard deduction is. You can kind of break it down into what those Schedule A items are on an itemized tax return. It's basically a list of things where you could say, hey, my allowable expenses are above the average. And those include things like your medical expenses, your charitable giving, your state taxes up to the new limit of $40,000 on state taxes. So some other little items in there that they say, okay, you're going to need kind of a basis of living, and these are the kinds of things that you're going to have to pay, like state taxes, maybe health insurance, and charitable giving. They'll give you a write-off for doing those kinds of things. Or you just take the standard deduction and say, hey, this is my living expense, or what I need just to kind of survive, and they're not going to kind of tax you on that. That's kind of the way I look at it, is that taxes are in a way transactional fees for running an economy inside of a society, inside of a system where there are common goods that are provided to everybody, like roads and a military to protect us from invasion. So different things like that is going on with the taxes. And so if you feel like maybe you're paying a little bit more than you need to out of your paychecks, your first step is going to be take a look at your W-4. So a W-4 is a form you fill out with most employers when you get started. It says, this is how you should be withdrawing from my paycheck. And the lowest you could start off with is exempt. And the exempt says, don't take out any taxes because I'm so poor that I fall under the standard deduction amount. And so I'm very rarely taxed. And so you can put on there exempt, but you kind of take the risk of if you end up owing taxes at the end of the year, you're gonna owe, and if you owe too much, they'll penalize you for not paying enough as you go, because that's taxes in the U.S. system are a pay-as-you-go type thing. As you earn, you owe those taxes, but they're just not going to make you pay them that second, right? They collect that out of your paycheck from your employer. They mandate that the employer has to collect those taxes out. They turn businesses into tax collectors by law. So the taxpayers, the rest of us who are paying taxes, actually aren't directly paying for someone to collect the taxes. Our employers end up doing that, and yeah, there's probably kind of an economic shifting in there to people who are buying goods and services from your employer. So that's kind of what's going on in modern day taxes. Now, there's a lot of more interesting things that we can learn about our modern economy, about wealth, by looking at the tax code. Because if there isn't money to tax, why would there be a tax code about something or other, right? If there wasn't such a thing as capital gains tax, if there were no capital gains, if people weren't making money off of selling stocks and bonds and things like that, there wouldn't be a capital gains tax. Real estate, selling things outside of a business, right? Investments. So if there was no one making any money doing that, there probably wouldn't be a tax around that. So you say, hey, there's kind of a thing here where if there is a tax law about it, somebody's probably making money doing it. And if they're making money doing it and there's tax provisions about it, there's a good chance that more than one person's doing it, because there has to be enough to make it worthwhile for the legislators to make rules about it. Or maybe there's just a lot of money being made doing those things. And so the tax code kind of reveals where the money's at, what things people do that society accepts, and there's tax rules around it. So you can use the tax system to become wealthy. That's what we do here at Tax Lab. We look at the tax laws and we say, okay, what is this telling us about how to generate wealth in America, in our modern society? And can we do it in such a way that we also minimize the taxes we have to pay legally and ethically? In a way, however, it's going to be like you're participating in sports, and the IRS is the opposing team. The lawmakers are the rule makers about how the game is played. And if you want to play the game of living and earning in our economy without getting kicked to the penalty box, then you got to play the game by the rules. Oftentimes, that means you have to pass the ball to there has to be some back and forth between you and the other team. If you take the ball and try to run away with it, oftentimes you're going to get flagged and thrown into the penalty box. But if you learn how to play the game, you might have to let them score a little bit just so that you can come out on top. And the IRS really doesn't care whether or not they're collecting more taxes off of you than they originally thought. as long as you're playing